Everyone. Thank you for joining our Zoom today. I haven't been doing this for a long time, but I thought everybody's curious about the market, so I thought I will have a market update. So maybe before we start, everyone in the Zoom, if you can give me a quick feedback. Are you in the Bay Area or are you not in the Bay Area? Or are you an investor? Are you thinking about buying or selling? Which side of the market are you more curious about? So if you want to hear more about which kind of what more people coming, yeah. So if you want to hear more about buyer side or seller side, what's the most important sector you're interested, let me know before we start the seminar. Instead of saying this is seminar, I would rather say this is more like a market update to share with you guys what I think about the market nowadays. So your input is also very important for me to understand where you're coming from as well. So if you want to type into the comments, let me know. Or you just want to hear me talking. I guess we can just start by sharing our data first. And then if you have any questions, feel free to jump in and let me know whether you care more about the buyer sector or the seller sector. What market are you in? Or are you investor or you looking for a primary home? So Justin, if you can help me share the screen for the data, that'd be great.
Yeah, okay. By the way, we are everyone, you can unmute yourself. So if you have any question, you can just unmute yourself and ask Coco anytime. Yeah,
The
go
chat
ahead
is
and
disabled.
Chat is disabled. That's why. Okay. So, okay, we disable it for security purposes, but I think we can open it up. If we run
okay.
into the security issue, then we'll disable. Yeah, sorry about that.
Okay,
Yeah.
I just
Enable,
open the
yeah,
chat.
let's enable the chat. Yeah.
I enable the chat. Okay.
Great. Okay.
So let me share my screen. Coco,
Thank
just a minute.
you. Yeah. So for the
Can you see my screen, Coco?
yeah.
Okay.
For the people who just joined us, so let me know which section of the market you're more interested in. Are you thinking about buying, selling, or are you just the investor, or you're just kind of observing? So then we can try to put our focus on the sections that you are more
Coco,
interested
I'm just unmute myself, and I don't want to make another noise.
No problem. Okay. If you have questions, you can type into the chat, or you can also, you can either type in the chat or you can unmute yourself and ask me the question. So let's start with the market update with some data first. So first page, please. Just the next page, please. Yeah. No, not this one. The data page, yeah. Okay, here we go. So we have collected some data for a number of single-family home listings in Santa Clara County, Alameda County, and San Mateo County, the three counties. Data started from 2018 until now. Maybe for all the attendees, if you can let me know which counties you're at. Are you in Santa Clara County or Alameda County or San Mateo County? Because even the counties are a little different too. I can also touch base on San Francisco as well, because the market is changing also in that market. So I collected all data for a number of single-family homes as well as condo listings and townhome listings for all three counties. We start with the data first, then we can discuss what's going on nowadays. So from this number, you can see the number increased from 2025 to 2026. The number of units increased. But then if you go back to 2019, the number actually decreased for single family homes. The reason we started with 2018 is because I have always thought I started real estate in 2003. So I've seen ups and downs. I have always thought 2018 was a peak time. So it was a peak time for almost everything for single family home or townhome or condos. And then in 2018, we had more inventory. Our market kind of slowed down a little bit. Then we got into pandemic 2020, and then the market changed so dramatically after that. Very different usage pattern, consumer patterns different. So for example, during pandemic, people looking for more space, not only more space for the living area, but also looking for more space for the yard outside the home, because home is no longer a place just for sleeping in. They also use as an office, as well as kids going to school on, at that time they're going to school online. So because of that reason, so single family home all of a sudden increased for the value, even for a little further away, because people can work from home. So commute was not a problem anymore. But then, of course, later on, this changed again. But that's why I started with 2018, because that was considered as a peak time. And then we wanted to see what really happened after 2018 until today. Did the single family home go up again based on that time frame, 2018 time frame, or did the condo actually go down based on that time frame? So we can take a look for data first, and we can discuss more details. So next slide, please. Next slide is just basically the price for average home price, the home price for the single family homes in Santa Clara County from 2018 to 2026. So as you can see, change from 2019, all the single family homes actually went up. So that means for most of the single family homes, even though 2018 we peaked, but it went higher again than 2018 for most of the homes. But then we had little changes now again. We're just talking about the general trend right now. Then from 2005 to 2026, let's go back. Okay, from 2005 to 2026. So the 1 year, we're not finished the year yet, but very small change. But if anything at all, we see it'll drop in general. Okay, maybe in February we see increase. Right now, even though the data shows a little increase, but a lot of places depends on which area, because those are just median numbers, right? So those are average numbers. So we're going to talk about which kind of homes actually went up, which kind of homes actually went down. Okay, next slide, please. Next slide, just the basic is a bar chart based on the numbers. So that's basically what we talk about. Okay, here's the number of townhomes, condo listings in Santa Clara County, starting from 2018 to today. So as you can see, number of townhomes and condo listings increased from 2019 until now, increased by 20 or 40, from 20 to 40%. It's actually a lot. From last year to today, also increased anywhere 10 to 25%. That's quite an increase as well, year to date. Yeah. So, okay, so next slide, please. That's going to be the average price for townhome and condo listing. Next one. Yeah. So if you look at the price, even though you see increase from 2019 to 2026, really because we have a mix of townhome and condo together, because MLS does not allow me to separate the condo and townhomes. So we're talking about the numbers combined, kind of increased, right? But then if you look at from last year to this year, mostly either very flat or have slight decrease. Okay, so going next one. So this is for Santa Clara County. Let's just briefly look at the similar numbers for Alameda County and San Mateo County, and then we can talk about what's really going on today. So let's see San Mateo County. So for the numbers, the change from last year, actually the number of single family home listings decreased slightly from last year to this year. And from 2019 until today, decreased if you compare month to month. So that means we have a shortage of supply in San Mateo County. South Bay used to do really well because all the high-tech companies are in South Bay. But nowadays, San Mateo County is doing better than Santa Clara County. One of the reasons I thought maybe because of the AI is moving to San Francisco. So a lot of single-family homes actually going higher in San Mateo County. I thought that was really interesting. Okay, next one, please. Next one is going to be the price, the average price for single-family home listings in San Mateo County. As you can see, they're almost, from all the metrics, they're all like increased. Even though most of the homes are pretty, I don't want to say most, a lot of places are actually pretty flat. But in San Mateo County, a lot of locations actually going higher. And we can talk about those cities as well. Okay. Definitely it's an increase for the single family homes since 2019. Definitely it's a big jump for the price. Okay, the next county is going to be Alameda County. The three major counties going to take a look. For Alameda County, sorry, I missed the townhome and condo listings in San Mateo County. For number of townhomes and condo listings in San Mateo County from 2025 to 2026, actually from month to month, we actually had a decrease in the inventory. But of course, from 2019 until now, it's an increase. So that means in general, we have more condo and townhome supplies than back then in 2019, 2018 timeframe. But then just in the recent, if you compare to last year, the number actually decreased slightly. Let's look at the average price for San Mateo County for condo and townhomes. Right, okay. So if you look at the price, the actually pretty, it's not like Santa Clara County. Remember, Santa Clara County almost all dropped from last year. So this in San Mateo County actually have a slight increase. Same thing for since 2019 from back then the peak time. So it's if you consider inflation, so it's pretty flat, but it's better. It's doing better than Santa Clara County. Okay, so lastly but not least, let's look at the Alameda County for the numbers. Number of single-family homes in Alameda County, the inventory actually dropped for single-family home from last year. Also, surprisingly, the inventory dropped from back in 2019 as well. That's actually quite surprising to me. It's interesting because I thought everywhere kind of increased from that back then. But anyhow, let's look at the price, average price for single family homes. So definitely it's also an increase for single family homes since 2019. Again, that was 2018 was what was one peak, but then definitely increased right now. If you compare to last year, it's pretty flat, except for the month of May. We're not quite done yet, but it's pretty flat or maybe have a slight drop in the price. Okay, so last set of data will be number of condos and townhomes in Alameda County. Let's look at the number. So from 2025 to 2026, it's actually a drop in the inventory. That's also surprising to me for Alameda County. And then the number increased since 2019. So we definitely have more condos, townhome for sale from back then when the price was higher. It has a slight drop, a lot of reasons. I can also talk about that as well. Okay, so let's look at price, average price for townhome condos. So the price since 2019, it's slight increase, I would say. But then the price in comparison to last year definitely is a decrease, even though the inventory slightly dropped. And we can talk about why. Okay, so all the numbers I know is kind of boring, but I hope those numbers are making sense. Just so you can unshare so we can talk about this. And please feel free to jump in if you have any questions. So there are a few things that I'm thinking about for the market. Why do we have a bigger increase in San Mateo County? As I just mentioned, I think because AI is a lot of AI companies and startups are moving to San Francisco. Today, I was talking to one of my builder clients. He said he built 5 or 6 brand new homes in San Francisco, and all of them actually got overbid, and then such people are already lined up before they are ready to list. Single family homes are actually going very hot in San Francisco at this moment, which is very surprising because even as of last year, San Francisco was not doing very well. I had a client who was trying to flip properties in San Francisco and had a loss. But now things change because of the AI. And then all the San Mateo counties, the cities in San Mateo counties, especially for the high-end homes like Atherton, Hillsborough, or Los Altos, all those cities are doing really well. So pushing the San Mateo County average price going much higher. So people want to ask me, why are those places doing so well, but other places doing so poorly? I describe this as our economy. It's almost like economy, letter K, right? The letter K, there's one stroke going up, there's one stroke going down. So this is our economy. I think we have two extremes. The rich getting richer and the poor getting poorer. So it's going two extremes. So like in the good cities like Atherton or Hillsborough or Los Altos and all those good cities, and people are really wanting to get in there because those are very prestigious and also has big land, has nice views, or has good schools. Having all those advantages and also closer. When I say closer to the city than the cities in the South Bay. So they're closer to the city, so it's just more convenient if they need to commute to San Francisco. So those cities are going really appreciating really rapidly. Another reason is because for the high-end homes, it's very hard to come by a very good inventory. When you look at the property, you need some very nice land. You want nice home. It's very hard to come by a good inventory, especially with such big land. Everybody's fighting for it. And remember, we're in the Bay Area. A lot of people are very rich by having very good stocks, and stocks are doing well. So, but they're very selective in picking which kind of inventory to buy. So when good inventory comes up, so they're fighting for it. They're fighting for the good inventory. And then that's why they're willing to pay more than the market value. They're willing to bid higher, even though it seems like the housing market is not doing so well. It seems like that way. On the other hand, for the other stroke of K, letter K, is going down, right? So it's going down because some inventory kind of being overlooked by people. So for example, condos and townhomes, there are multiple reasons. Let's analyze it. So one of the reasons I just mentioned during pandemic, consumers usage pattern changed. They changed because they want more space, they want a yard. So that's why they don't want to go for the condo or townhomes anymore. So condo and townhomes are supposed to be a beginner's home. So they supposed to live there for a couple of years and then they can move up to single family home. But I noticed a lot of younger generation are skipping the first step. They are not using that as a move up step anymore. They just go straight into the single family home sector. As you can see, the inventory of single family home actually dropped. So, but we have more people waiting for single family homes. So that's why we have in general, we have more demand than supply in general. But if you look at which sectors are going higher, which sectors going lower, you'll notice the ones going higher are the ones are having great area, the best location. They have the best condition. They have the good condition, or they have the best school. So they have the best of the best. Then that's where people are fighting for. But then if you have any quote unquote problems or issues with the property, if it's on the busy road, if it's next to highway, then people are more selective because they have the money. They have money to buy, but they just want to be very selective about what they are buying. So they're being very careful about how to spend the money. They're not just buying anything and hoping for appreciation. That's why you see some homes are moving fast, really, really fast, but some homes are not moving. Condos and townhomes, because usage pattern change, that's one reason. A second reason for that is because HOA become to be more out of control. HOA has always been out of control because nobody can control HOA, right? So, but it becomes to be more out of control. I say that is because they have more regulations coming out now. Now they have this SB 326, which is balcony inspection required. So at my open house, I was there's one visitor coming in. I was chatting with him. I said, "Hey, what do you do for a living?" He said, "I'm a balcony inspector." I said, "Yeah, right, balcony inspector. You guys are so strict." You know what he said? He said, "Of course, because that's for the safety." Okay, so of course, when you have safety concerns, you are basically use a magnifier looking for problems. That's where problems, of course, will come. So that becomes to be actually an issue for uh, a lot of condos because when they have balcony, they have to do a balcony inspection. When you do a balcony inspection, it's almost guaranteed that you're gonna have something needs to be fixed, and then HOA has to come up with extra money. Either that has to be a special assessment, or that has to be increased HOA fee. That's another reason condos are having hard time nowadays. We just noticed in Alameda County, I had a client who bought a property, bought the condo for, let's say, let me just use some made up numbers. Okay, so they bought for 500,000. So now the complex are selling probably maybe 400,000. Plus, they also have a special assessment for about $35,000. So that becomes to be very difficult for the seller and also for the buyer to take over the project as well. So that's why when I look at the Alameda County condo and townhomes, the numbers decrease. It doesn't mean it becomes to be less supply. It just means it's harder to sell. Some people are hanging on to it because they are losing money. A lot of people are selling at loss. It's interesting when I say selling at loss because finally, this is a bad word to say, but finally, we realize investment has risk. Even investment in housing market in Silicon Valley has risk because before we almost thought, okay, if we invest in Silicon Valley, it's going to be guaranteed to have appreciation. So now it's not guaranteed. Investment has risk. So we have to be really careful about what we're investing. So that's in general what's going on. But I see we have in our comment, I see we have people in buyer's market. Also, we have Mary in the seller's market. Hi, Mary. So I think my advice for buyers, I think is a great window of opportunities. The reason I say that is because sometimes buyers are scared and thinking, I'm going to wait. But if you wait, you're going to miss the window of opportunity. You just have to be careful what you're looking for. You know what you need. So understand your needs and prioritize your requirements. And based on your requirements, look for which kind of inventory is going to service your criteria, and then think about what's the room for appreciation. So basically, you have to satisfy what you need first, then think about whether this actually which kind of investment potential, appreciation potential is. So we have to really prioritize our needs, right? Yeah. Any questions? Okay. I think that's maybe just not muted. For seller, do we want to sell right now or do we want to wait for a better market? I think it also depends on which type of property. Some type of property actually had a lot of good appreciation this time. Some properties are having a little bit more difficulty. So we just have to know, are we looking at which kind of direction are we looking at? Depends on the type of property and which kind of market you're in. And then we can decide what would be the best time to sell. So we don't want to time the market, but there's always a little trend to look for. So I think still a good idea to kind of observe what's going on and then try to decide what would be the best time to present the home on the market. I wanted to see whether anybody has any questions at this time. Where do they see the messages? So talk about AI. So AI has replaced quite a lot of beginner jobs. I thought about one thing. I have always told people when it's entry level price, don't don't worry about it. I feel like that statement is wrong. So right now, I just mentioned about the high end properties actually appreciating a lot. So for the entry level jobs, they are gone in Silicon Valley. They're gone. They're not completely gone, but a lot of them are gone. So when the entry level jobs are gone, the entry level properties are kind of having hard time. I hope I'm making sense, right? So almost feel like we have to relook at the market. We look at the job market, we look at the stock market. We understand people in the Silicon Valley, in Bay Area, actually have money, but they're being more selective. That's a very important conclusion one, right? Conclusion two: Are we still looking at those entry level properties? It really depends on what you're looking for. If you're looking for a place to stay, and if that place can satisfy your requirements and the area actually has room for appreciation, I think it's still a good investment opportunity. And right now is a good window of opportunity for you to be able to negotiate for a good price. Because when do you want to buy? You don't want to buy when the market is really competitive and then you have to bid high, right? So what are your thoughts on San Ramon, Pleasanton, Dublin, Tri-Valley in general? This is a good question. I feel depends on where you are. So back in 2020, when during pandemic, when people can go a little further, so they can live in newer home, bigger home, and because they don't have to commute. If your job is in South Bay and you have to commute all the way from San Ramon, I think that's very hard on you. And it's I think owning a home also not only owning a home, not only just owning the space, but also you have to really think about the commuter time because that's part of quality of life. I want you to enjoy your quality of life. So if you actually work in the Bay Area and you have to commute from San Ramon, I think that's going to be hard. And I think, but if your job is actually in that location, I think that's great because you have newer home, bigger home, nice home, and the price is kind of depressed. Depends on the property, but it's kind of it's flat or probably went down, right? So I think it's a great opportunity for you to get good deals. But if you're able to buy something near your job or near most jobs, if so, for example, you cannot guarantee you're going to stay where you are right now for your current job, but if most of the kind of jobs are going to be in this area, so if you can kind of stay close, and right now it's really not, depends on the area. A lot of areas are really not a seller's market right now, so I think it's very balanced, or some places are even a buyer's market. So I think you should be able to find something closer. So again, for buyer, I think very, very important. You have to sort out what's the most important thing for you: commute time, or the size of the home, or the condition of the home. But I still think the most important thing is still location. Location doesn't mean you have to be in the best school district. Doesn't mean that. It means a lot of things. It means it could be close to job, right? Close to work, or having decent school. Depends on how old your kids are. Some people are thinking they only have babies right now, but they're thinking about high school already. You don't need to think that far. It's good to plan ahead, but no need to plan so far ahead. Um, I bought my first home in California when I relocated to California in 2000. I bought my first home in Cambrian Park, 95118. At that time, the elementary school was Litz Elementary. Was really really bad school. I think it was only either 4 or 6. I forgot. But I was young and had no kids, right? I just got married, so I didn't think much. I thought that's my starter home. I'm going to change. So a few years later, I changed. I moved out, and I had clients buying on the same street. I thought about the school. So I mentioned the school. And my client told me, oh, the school is actually very good. That's a good school. I said, really? I look at this. It actually went up, went to like 8, right? So it becomes to be really good. So that means for some places, if you don't need a school right away, the school will actually change. If you bought it cheaper because the school is not so good right now, but because a lot of professional move in, and then the school change, and then you get appreciation even just from the change of the school. Another example is just Cupertino High. Cupertino High was not such a good school before, um, but because all the professionals from Apple moved into Rancho Recanado, that's for many years, right? And then Cupertino High become to be really really good school. So things change. So you don't need to. You can, yes, it's a good idea to plan ahead, but maybe don't plan so far ahead that then you are thinking about high school already when you only have babies, right? So because things really change, yeah. So I think location is important, but what's the most important thing is the easiness, the convenience for you to commute, or is the location that you have to be close to your friends. It depends on what you're looking for, right? So what about River Islands, Lansdorp, or Mountain House, or Tracy Market? That's a great investment place. Mountain House was actually pretty hot. Even last year was okay, but I think right now uh, Tracy is slower now, but still have people, transactions still going on. But definitely, I think it's good investment opportunity. But if you're working here, you want to move, you want to commute, that's going to be impossible. But I think if you're able to work remotely and you can get newer home in Mountain House or Tracy or Lansdorp, I think still a good idea. And I think those areas still should have um, potential for appreciation if you hold it long enough. We have been so spoiled in the Bay Area. We think that if we buy it today, and I can get the appreciation next month, which was even true in the previous years. But now we have to look at the normal market, which takes about 3 to 5 years for appreciation. Yeah. So, okay. So I hope I answered your questions for Sampath and Nkesh. Yeah. Any other questions about the market or things you want to know? What else you guys want to hear about the market? What's the price range in the area? Tracy, so for example, you can get around 800,000 for a property around 2,000. How much was Ponderosa? Cam, do you remember how much was Ponderosa? What's the living area? It's about 20 over 2,000 square footage. You should be able to get around $800,000. Definitely much cheaper than this area. Yeah. What about buying as this property with good location in Sunnyvale? Are those competitive too? Sunnyvale depends on, yeah, which location. So 94087 is the best zip code, but 94086 is good as well. Sunnyvale in general is still very competitive, but not as competitive as last year. So I think it has some market corrections because it just went really high in the price. Um, but definitely still has good demand because it's very convenient and also, yeah, very sorry, Tracy, earlier I said 2,900 square foot, 2,900 square foot, about 800,000. Okay. Yeah, so in Sunnyvale, I think you can buy as is and doing some remodel. I want to mention about the as is property, as is like in poor condition versus really good, very good condition. Um, Remodel is not an easy job, especially after pandemic. The labor and material costs have all increased. So be very careful when you're buying as these properties because you think you can do whatever based on your taste, but you may end up in spending a lot more than you were budgeting for. Because whenever you are trying to plan for your own home, you always want to plan for the best. So very easy to go over budget. So again, plan for the most important thing for yourself, and then uh, or yes, you can definitely do a full remodel if you plan to stay there for a long time. It depends on, and also what's the most important? Kitchen and bathroom are the most important thing. So make them look very nice. So you get to enjoy the quality of the remodel as well as when you resell the property, the quality, because the quality stuff still they last, right? So you don't have to redo your remodel at that time, hopefully. What do you think the outlook is for Piedmont, Pines, or Montclair in Oakland? Um, Oakland in general has been pretty depressed in general, but of course, there are good areas. Uh, there are good areas in Oakland. So if you have a need to stay there, yes, I think those areas have potential to go up in the future. But right now, I feel a lot of people are shining away from Oakland, even for Oakland Hills, which is the very nice part of Oakland. So people just have this I guess, bias, right, toward Oakland. So I think be very careful about investing over there. But if there's a need, of course, if you need to be in that area, I think that's still a okay location. It's close enough to the Bay Area, and I think just like San Francisco used to be so depressed, and now finally San Francisco kind of start to revive for the single family homes, not for the townhome condos right now, but for single family homes. But then you can imagine Oakland so close to San Francisco. Hopefully, if San Francisco is reviving, and then Oakland should be going up as well. But really need to make sure all the crime has been in control before the appreciation comes back. Yeah. So we're all asking about the remote areas. So, but the biggest appreciation nowadays is in Los Altos and Atherton and Hillsborough, those very expensive areas. Yeah. In Santa Clara County, the selling price has been very high than it was listed in recent months. Is it suddenly changed? Do you think it's good to wait for sometimes in buying? So I'm always wanting to say that when you look at the asking price, when you say it's always been sold much higher than asking price. So I always tell people, if the market price is here, if you list it here, of course it's gonna go up. But if it's gonna go up to where market is gonna be, or it's gonna go over market, that's a different story. So asking price versus selling price is not the best indication of the market, because we need to know what the market price is before we say what's the gap of the asking price and the sold price. But in general, to answer your question, if the asking price similar than as before, then the sold price recently in Santa Clara County has not been as high as before, if that's the answer you're looking for. So that answer is correct. It's not as high as before. So that's why I was saying it's a good window of opportunity to step in. By waiting, if you just like when you buy stocks, you don't really know when the bottom is. So if you see it's low enough and it fits in your budget and it works for your need, I think you can buy and hold for long-term appreciation. But if it doesn't work out for you simply because the price is good, you think it's good enough, but it really doesn't work for you, I think you still have to think twice whether you should go for that opportunity or not. Because we want the purchase to work for your needs first before you consider whether it's going to be appreciating or not. So basically, I want you to buy for your real needs rather than buy because it seems to be a good deal, right? Um,
I have a question.
yeah.
Yeah. So we were talking about the starting homes, right? At what budget point, like does a starting home like kind of gets into, okay, this is the ideal home that I'm gonna stay there for the next 10 years or so. I mean, all I'm trying to trying to explain is that so uh, does it make sense for a house which is at 1.5 1.6 to be a starting home? Because like you would have to wait at least some time before it appreciates, and then like you get to kind of even out the interest, the mortgage payments and everything. What's the like a good range of starting home, and what's the ideal time that one should wait before they move on to the like the second home or the next home?
Okay, good question. So the starting home, what's the price? There's no a price point for starter home. It's a price range and also depends on the market. So for example, what is a starting home in Cupertino versus what's a starting home in Sunnyvale? It could be different, right? So, in general, if we just say in general, let's forget about the location. In general, for number wise, I always tell people like $1 million, it has to be a starter home. Very unfortunately, in the Bay Area, $1 million is almost $1 million is a lot of money, but it almost like feels like nothing. So I still remember back then, like a few years ago, Newark, when I was talking to one of my clients, we're looking at a home in Newark for 960 something, but it's going to be bid up to maybe 980, only on 20,000 over asking. And I told him this is going to be very good entry home, a starting home, because Newark is the only location on the East Bay that's close to Meta, that's within 10 miles because they can cross the bridge, right? And then I think the employees at Meta will get compensated for living within 10 miles. So that special location will make Newark go higher in price for the single family homes. So I said 980 probably is going to be the last single family home under 1 million in Newark if you don't buy this one. And sure enough, after that, every single family homes in Newark are over $1 million. So that's just very rare to come. So in that kind of time point, think about how much lower is going to go. It's not going to go lower because that location is very special. It's very easy commute to Meta, and then that's the only location on the East Bay can get to Meta within 10 miles. Otherwise, you have to live on the peninsula, which is going to be much more expensive unless you go to East Palo Alto, which is fine too. East Palo Alto has nothing wrong with that. Um, so so in general, I think 1 million is a very good price point for starter home, but 1.5, 1.6 in Sunnyvale, definitely, because you cannot buy anything in with 1 million. Speaking of Sunnyvale, 94089, when my client bought it for 850,000, that's like in a lake view, lake something, streets, right? Near Santa Clara. Not such great streets. But that location doubled, become to be 1.5 in just almost just a half a year back then. Because it's so easy to double for those starting prices, 800,000, 850,000, to double into 1.5, $1.6 million range. So I think to answer your question, if you're looking for 1.5, 1.6 million in Sunnyvale, depends on which part of Sunnyvale. I recently sold homes like in that price range for 94085. That's still a good zip code. For around 1.6, 1.5, actually 1.5, yeah. So I think that's a very good starter home. That's a small home, but with very decent size of yard. So I think it has potential because home is small. If it satisfies your needs right now, it's not a big home. It's just a very simple, small home, but it has good yard space for you to expand in the future. I think that's a very, very good investment because you can live there, wait for the appreciation, and it can be a good investment in the future as well. I hope I answered your question. Let me know if you need further information on that, huh? Let's go back to the questions. What's the best way to handle the property tax going higher for any homes? Property tax is calculated based on the originally based on purchase price. So it's around 1.25% of your purchase price. However, if the price goes down, for example, if it goes down, you can actually file to the county to request for relief, for property tax relief. All you need to do is provide the comps surrounding your property and say, hey, other homes surrounding me are selling for less. So you can get property tax reduction if it gets approved. Is that your question? I'm not sure I answered your question, but that's what I can think of. Yeah. What about Evergreen in San Jose? Evergreen is on the east part of San Jose. East San Jose in general is considered as not the best part of the San Jose. So San Jose, you have west, east, central San Jose, south, and north. So the best part of San Jose will be West San Jose. But Evergreen is the best part of East San Jose. Evergreen has beautiful homes, has newer homes, bigger homes. I like the land in Evergreen as well. But the commute is difficult because it's very far from the highways. So for all the homes you want to reach to the homes in Evergreen, you have to drive a lot of local roads, a lot of traffic. So I think if you have, it depends on again, you have to weigh what you're looking for. Are you looking for a big, nice home in San Jose, or are you looking for a good commute? And Evergreen has good school too, by the way. So definitely Evergreen can be a good choice if it satisfies your requirements. We just have, and then I think Evergreen has it's a good window of opportunity. I can say this, it's a good window to buy in Evergreen right now because it has room for negotiation. And I think it has good appreciation room in the future when the market is back up, and then because it has nice home, nice quality home, it has nice land as well. Yeah. What do you think of South San Jose, Blossom Valley area? So South San Jose, for a lot of people, Blossom Valley area, for a lot of people think that's a little too far away from the central location. However, it has good family neighborhood. I have a lot of clients living in that area, and actually I think that area is very nice. Blossom Valley. I actually had a flipper. I had an investor buy and sell a lot of properties in Blossom Valley area because they can acquire cheaper fix uppers over there, and then they can use and then do some remodel and then quickly turn around. So it's suitable for primary home as well as investment opportunities. Again, I think depends on your need, especially if you have jobs near like Xilinx, if you work over there, or Netflix, so I think those are good commutes and it's good family neighborhood. So I like Blossom Valley, by the way. So yeah, we have a lot of clients living there. How about interest rate recently? Interest rates recently, recently, when I say recently, from last Thursday and Friday until today, it actually went pretty high. It went higher for no reason. So, but interest rate changes every day. So, if you're not locking the rate today, don't worry about it. But interest rate has been fluctuating. So now, of course, we have to look at each different scenarios. But if we look at now today, in general, we're talking about in the 6% range. And Thursday, before last Thursday, we're still looking around under 6. We can get 5.875, and this week we're looking at 6.375 or 6.5. So it fluctuates. So if you're in contract, you want to lock in because you don't know what's going to happen. You need to close in 30 days. You want to lock in right away. But if you're trying to refinance or if you are budgeting for your next purchase, you don't have to panic because you can wait. Probably, hopefully, you will be adjusted. What do you think of the future trade for new builds? Townhouse is a good investment right now. For brand new construction, because builders are actually giving a lot of incentives, I think if you can negotiate. So for new build, we can negotiate too, by the way. If we can negotiate down the price or get a lot of incentives, I think it's worth it because a lot of people don't want to deal with repairs. The new homes are really giving incentive. They try to clear their pipeline in comparison to a lot of resale, because some people bought about 2 years ago. If they sell right now, they may have a loss. So a lot of people are hanging on to it, not willing to sell at a lower price. So that means you actually have to pay higher for the resale properties than for the brand new constructions. So you really have to very actively looking at what's going on surrounding you, and then new homes may be a good choice if you can get a good deal. Yeah, we have to negotiate. I hope that's the question in the chat. Any other questions or concerns? We cannot predict the future, but I think real estate is really for long-term investments. So if you buy something, if you want to sell right away and then want to make money, that's time probably has gone already. So, but if you can hang on to it while you're living there, you're enjoying living there because you need the home for going to work, for kids go to school, anyways, and then at the same time you will gradually appreciate, and that's the biggest win. Yeah. So I hope this kind of conversation helps. I can have a weekly or bi-weekly type of conversation. It doesn't have to be a seminar. Sometimes I invite experts, industry experts. I can invite 1031 exchange, or I can invite title company to explain how title is held and then things like that, or living trust. Any topics you guys want to hear, I can invite the industry expert and then we can discuss together. Or if I have nobody, we can just have the conversation together and then talk about the market and then talk about your plans. Yeah, see what we can help you. So if you have any special topics you're interested, you can type in the chat or you can email me and then I can schedule our industry experts to be here. Do we have any industry, let me see our participants. Do we have any industry experts here today?
Hi, Coco.
Who's this?
Richard.
Oh, hi, Richard. Oh, we have a title specialist. Hi, Richard. Thank you for joining me.
Not a problem.
Do you have any suggestions or stories to share in the last let's say 6 minutes with our
Absolutely.
yeah.
Absolutely. I'll do one real quick. A lot of you probably heard a lot from title company telling you about scams and everything. Um, I think scam is one of the biggest issue when it comes to title insurance, closing, and everything. I'm not gonna spend too much time on that today. I'm gonna share something that's actually people will get when the escrow is closed. That said, a lot of people will get a flyer from this company saying that, hey, we're gonna prepare your deed, or we're gonna help you find the profile. We charge you $80 or $90 for a profile. If you see any of those, I don't necessarily think those are scam, but it's definitely unnecessary to purchase any of those stuff because you can simply get profile from a lot of resources, or even you can go on websites. You can find those information yourself. There's absolutely no need to get a property profile. If you're worried about your information is not corrected, is not recorded correctly, the only way you can get it correct is go to county. That's the only correct source that you can get your information from. Anybody claim that they can get you information is only for reference. None of them has any authority. So that is just one tip. If you guys receive letters telling you that, hey, you know what, spend a little money, we'll get you some reports, especially when it comes to property profile, there's absolutely no need to get any of those.
That sounds great. Thank you, Richard. Actually, that's for any people who just recently purchased property. For in our case, when we try to sell people's property, when I try to sell your property, I also get the property profile, and then that's another time. Hopefully, that's a time for me to really make sure I double check your records and everything, so that I can help you update your county record, update your square footage. If you had any permitted square footage that's not included in the county record, I can help you update that too. So I think you brought up a good point. But when you purchase property, yeah, we do receive a lot of mail like that. Our clients ask us whether we need to pay that. That you don't have to pay. You're right. Yeah, that's a very good point. Yeah. Thank you for sharing.
Thank you.
Next time, maybe I invite you for also title fraud, the title scam, so that we are all aware of what's going on, like wiring fraud and things like that. Yeah.
We'll be happy to do that.
Okay, thank you. All right, so we're almost at 8 o'clock. I can take one last question if anybody has a question. If not, yeah, my email is cocotanre@gmail.com. And I'm going to type in my phone number, 408-829-6053. This is my phone number. You can feel free to call me. You can email me or call me. And for anybody who use WeChat, you can add me on the WeChat. My WeChat ID is Cocotan Real Estate. Cocotan Real Estate. This is my WeChat ID. Yeah. So, feel free to add me on your WeChat or call me or email me for any questions. Like I mentioned, we'll try to do this kind of conversation maybe on a more regular basis, and then hopefully we can get reconnected and help you answer your questions in the industry. Yeah. Thank you, everyone. Have a wonderful evening for the rest of the evening. Thank you for joining today. Bye-bye now.